Let's look more at the economic side of things with Cornelia Meyer, CEO of Meyer Resource. She's an economist and oil analyst on Skype from Bern today. Always nice to see you, Cornelia. Before we get into the wider oil picture, which I know includes what was happening at OPEC recently, when we say the price fell yesterday, how much did it fall and how bad was it?
Well, it fell more than 10%. At some stage, Brent was down around 13%. So that was probably an overreaction. You know, markets always overshoot and undershoot, but it shows real awareness amongst traders, amongst everybody in terms of what does this mean, as your report showed. What will that mean for air travel? You know, some people say it's not that much that will be closed off because it's right now Southern Africa to other countries. But, you know, if should this variant spread, if then the transatlantic routes and things like that close down again, that would be bad. So markets are fearing for the worst.
Will OPEC be, I'm using this term loosely here, will they be happy, given that they decided they weren't going to increase output under all sorts of pressure to increase output recently, and then other countries decided to go into their strategic reserves? Now it plays out like this.
OPEC is never happy when misery strikes, and I would like to sort of correct that slightly. OPEC has increased oil production 400,000 barrels a day, month on month on month. The debate was that the US and some other big consumers wanted them to release more. So I think what they feel that their strategy was validated. They felt, and they always said, let's go it slow because we don't know what the virus will do, and the virus has proven to have a mind of its own. So the question is, at the next meeting, will they again increase for 400,000 barrels a day, or will they not? And it just shows that going the steady route might have proven them right in the medium term.
Validated, that was the word I was looking for. Not happy, but you're quite right to put it that way. Broadening out, Cornelia, to the wider economy, I just think about everything we've got going on at the moment. Inflation in the US going up, the supply chain problems, oil as well, variants of COVID-19. It's not painting the rosiest picture.
No, it's not painting the rosiest picture, and we are rightfully concerned. And you know what we see in Europe, especially, we see Austria is having shutdowns, Belgium is having shutdowns, parts of Germany are having sort of semi-shutdowns. So more and more economies are going back into further shutdowns. And should this variant prove that the vaccines are not really geared up to defend people against this variant, that would be bad. So on the good side, though, when we see we've had now several waves, and we have had several waves of shutdowns, every shutdown has had an incrementally less bad impact on the economy. So whilst it is not good, it's less bad than it was the last time around.
Exactly. We would hope by this stage that we would be learning from the past, wouldn't we? Because the hard lockdowns, which many would argue were necessary early on, they really did cripple parts of the economy which still haven't recovered.
Absolutely, and what we saw when you look at the economic recovery, you see that the goods, the trade in goods went up really quickly, you know, to pre-pandemic levels, whereas trade in services has not gone up that much, and that is mainly because of tourism and travel. That is a service industry, and if we shutter this in again, that will not be easy.
Always a pleasure to talk to Cornelia Meyer when it comes to oil and the economy. Thank you for your time.
Thank you so much, Kamal.